Imagine the ultimate freedom of working from anywhere in the world, with your laptop as your office and new cultures waiting to be explored. It sounds like an incredible dream, doesn't it? But as you embrace this amazing lifestyle as a digital nomad, one crucial question often emerges that can have significant financial implications and is essential to understand. For digital nomads, determining tax residency is not a simple, one-size-fits-all answer, but it fundamentally revolves around where you are physically present and where your primary ties are strongest. It is important to know that it is not necessarily about your citizenship or even where your income originates, but rather where a specific country considers you to be a resident for its tax purposes, based on its own local laws and definitions. The core mechanism behind establishing tax residency often boils down to a country's domestic laws, especially its physical presence test. Many countries, and this is a common global standard, use a threshold of 183 days spent within their borders during a single tax year. If you exceed this amount of time, even if you are just visiting on a tourist visa, you could be deemed a tax resident there. This rule is designed to establish a clear line for tax obligations, ensuring that individuals who physically live in a country for an extended period contribute their fair share to its public services and infrastructure. However, it is vital to remember that it is not always just about counting the number of days you spend in one place. If you do not meet the 183-day threshold in any single country, or if you happen to exceed it in multiple countries during the same year, tax authorities will then look at your deeper connections and ties. These strong ties can include having a permanent home readily available to you, where your family lives, where your economic interests are centered, such as bank accounts or business registrations, and even where your most important personal belongings are located. Ultimately, the country where you have the strongest center of vital interests usually claims your primary tax residency. To successfully navigate this complex landscape, the most actionable step you can take as a digital nomad is meticulously tracking your days in every single country you visit. Utilizing a travel tracking application or maintaining a detailed spreadsheet can be incredibly helpful for this. Beyond just tracking, you must also understand the specific tax residency rules for the countries you plan to spend significant time in, and crucially, for your home country. Many nations have exit tax rules or ongoing residency requirements, even after you physically leave, meaning you might still have tax obligations there for a period, so researching is key. An important insider detail here is the critical role of international tax treaties. Many countries have bilateral agreements specifically designed to prevent double taxation, which could otherwise be a huge burden for global citizens. These treaties often include sophisticated, tiebreaker rules to determine residency if two different countries both claim you as a tax resident simultaneously. For example, if you own a home in two treaty countries, the treaty might prioritize the country where you have a habitual abode or demonstrably stronger personal relations. Another key concept to explore is becoming a tax non-resident in your home country, which often requires carefully breaking all significant ties and officially notifying the relevant tax authority. Ultimately, understanding these foundational principles and actively managing your physical presence, along with your financial and personal ties, empowers you to comply with tax laws and avoid unexpected liabilities or penalties. This proactive approach brings tremendous peace of mind to your nomadic journey, allowing you to fully focus on the joy of exploration, the excitement of remote work, and building your global life, rather than being constantly worried about complex tax issues down the line. Remember, careful planning and meticulous record-keeping are truly your best tools for a financially smooth and worry-free adventure.